January mutual fund numbers just dropped and gold ETFs are in a full power rampage as investors are really charging towards the yellow metal like never seen before. So records are being broken and limits really demolished, and the momentum is unstoppable for this gold rush. And my colleague Alex really gets us all the details on that. So it's real gold rush really playing out in the market, Alex.
Well, absolutely. It's 24-karat magic in the air. I've been singing the song outside, and this is something that I think a lot of mutual fund CEOs will be humming as well, because there is a little bit of recency bias at play. Let's talk about that a little bit. 24,000 crore rupees is the number that you're seeing for gold ETFs, and that's just net inflows in the month gone by. You add other ETFs to that, and you will see inflows of over 15,000 crore rupees. And the reason why this is important, of course, is that other ETFs also includes silver ETFs. So if you pile those two together, there's a significant amount of money that is chasing into these commodities. But I'll add another category into that, which is the multi-asset category. And the multi-asset category is at 10,485 crore rupees. And why this is important is that this includes a sub-component often of commodities, and largely fund managers have chosen to put money in gold and silver. Now, why is this considerable? 24,000 crore rupees or thereabouts was the total inflow into actively managed equity mutual fund schemes as well. This is 24,040 crore rupees. This is actually edged past the inflows into actively managed equities as a full category, and that includes your sectoral and thematic funds, your flexi cap funds, your multi-asset funds, your large cap funds, all of those put together. But let's talk about the context, and it's important to understand why this is taking place. In the month of January, you've had gold as a commodity rise as much as 13% till the end of January, which is the 29th of January, at which point the drop took place of as much as 10% from the peak. It continues to remain above $5,000 to the troy ounce at this point. And you can argue, therefore, that a lot of recency bias has played through for investors. There could even be instances of selling in certain other categories. I saw an outflow from corporate bond funds in the month gone by, and that has resulted in this kind of a figure. But beyond this, the SIP number is something that you should watch very closely, and that stands very interestingly at 31,002. That's exactly the number in the previous month. And it's not that the same number of people have put the same amount of money, because the net inflows are usually significantly lower. It is a fact that a lot of people are churning SIPs as well. But this is a very robust number. It is, in fact, an all-time high. What else do you need to bear in mind? The overall inflows are strong, and that's because at the start of the quarter, you have a lot of money pouring into fixed income mutual funds. And all told, it's a pretty decent number considering that NFOs, new fund offers, have not contributed to a lot.